Welcome to Electrified. It's your host, Dylan Loomis. So first up today, in case you missed it, New York's $226 billion pension fund announced they're planning to drop fossil fuel stocks, saying they'll divest from many fossil fuels in the next 5 years and ultimately sell their shares in other companies contributing to global warming by 2040. And this is New York State's pension fund, one of the largest and most influential investors in the country. This is big news because this decision could accelerate a broader shift in global markets away from oil and gas companies over time. Now, in case anyone is invested in traditional energy, I actually think if Biden limits drilling and puts the clamps down on fossil fuels, it will serve to limit the supply to a select number of players, as under Trump, basically my wife and I probably could have gone and got a drilling license. So if you play it right, with a more limited supply, and we do eventually see a market shift from growth to value, energy stocks could see a strong run in the first 6 months of 2021. I personally think the market needs to see a 5 to 10% pullback sometime in January to reset before running higher, but without going too far on this tangent, I felt it was at least important to mention. If you guys would like nuggets of economics and market talk, please let me know below, as behind the scenes, that's where I've been spending most of my time. I have considered a second channel, but I'd prefer to work these topics in here as long as most of you are okay with that. I also considered calling the channel Electrifinance, but if that's super lame and I feel like it might be, please let me know. But anyway, the New York State Comptroller Thomas P. DiNapoli said that his primary concern was safeguarding the taxpayer guaranteed retirement savings of 1.1 million state and municipal workers who rely on the fund, and from that context, his duty is of course to set up the fund for long-term success in a world that's moving away from fossil fuels. DiNapoli said the fund would drop stocks that do not meet new standards, and they'll require them to show future ability to provide returns in light of the global consensus on climate change. Pension funds in the UK, Ireland, Sweden, and a few other places have adopted similar strategies as well. But shifting to Tesla, some Giga castings were spotted at Giga Shanghai, and of course the Giga press is operational at least to some degree, which would make sense as we've already seen Model Ys driving around the facility. And as you can see, there is expansion going on right now at Giga Shanghai, but no one knows for sure exactly what. The chatter is that this will be phase 3, and it could be a supercharger facility, an R&D center for the custom Chinese car, or really any number of options, so we'll have to wait and see. And this is a watermelon field, in case you were wondering. And there are supposed to be up to 8 GigaPress machines at Giga Berlin. Next up, Jefferies analyst Philippe Houchois downgraded Tesla stock to hold from buy with a price target of $650, which is actually up from $500 previously. In his note, he said that while Tesla is in a league of its own, the company would likely not be able to dominate the auto industry given the industry structure and politics. Philippe also noted execution risk with Tesla's expansion, which is actually pretty astute and something we all need to remember, as 4680 structural cells, DBE at scale, exoskeleton manufacturing, etc. are massive changes and really hard to perform well at scale. Tesla will of course figure it out, but we shouldn't just assume that it all goes without any setbacks. Philippe did say that multiple challenges to the auto business model, EVs, batteries, software, autonomy, design to manufacture, and direct selling will ensure a durable competitive edge for Tesla, and they do have a messianic brand that reaches far beyond autos. Tesla remains self-funded, but raising capital keeps pressure on legacies. So overall, this is a pretty confusing note. They downgrade the stock to hold, but they raise their price target to $650, as today Tesla stock trades around $600. So there you have it. And sticking with Tesla stock, I'm sure most of you have heard by now, but in case you have not, Tesla did complete their secondary on the 8th and the 9th, which most certainly played a role in the Tesla pullback. It's not confirmed at what prices the new shares were issued, but we will find out in a few weeks. And there are now most likely between 7.5 and 8 million new Tesla shares in the float. A quick note on Tesla Energy, the Portsmouth City Council in the UK recently got an upgrade of a 250 kilowatt solar installation on the roof, adding to their existing 50 kilowatt system they had previously. They also now have 10 power walls that are operational and about 135 kilowatt hours in size, or enough to power a home for about 2 weeks. But the news here is that the more government bodies we see make moves like this, the faster the spread of electrification will be. A council cabinet member said, "It's fantastic to see Portsmouth City Council leading the way when it comes to innovative projects like this. Not only are we producing and using our own renewable energy, but projects like this dramatically reduce the council's ongoing energy costs." So last night, NIO announced that they plan to sell 60 million American Depositary Shares, otherwise referred to as ADS, and underwriters, including Morgan Stanley, have the option to buy an additional 9 million shares. An ADS is an equity share of a non-US company that is held by a US depository bank and is available for purchase by US investors. The entire issuance of shares by a foreign company is called an American Depositary Receipt, while the individual shares are referred to as ADSs. The main difference between common stock and an ADR is that ADRs typically do not have voting rights, but investors can purchase ADR stock on the major US exchanges. So these capital raises really should not be a surprise, as the fundraising will follow the rising worldwide demand, making these all-electric car companies sell more stock in order to fund their growth and expansion. NIO, however, said that they would use the proceeds, at least in part, to develop their autonomous driving technology. So a lot of Chinese electric car stocks did have a nice run last month after some strong earnings, but they have pulled back a bit so far in December. A big part of that could be that the United States is considering a measure that would require Chinese companies listed in the US to undergo audits or face being delisted. So we'll see how that plays out, but as of today, NIO stock is trading down about 8% at the time of this recording. Now, wrapping up for today, I want you guys to pick up on this theme that we are seeing more and more from everyone not named Tesla. Stick with me as I'll land the plane in a minute. So Hyundai teased their new Ioniq 5 and said that it will have bi-directional charging. So Hyundai says their new Ioniq brand is going to feature next-gen all-electric vehicles, but this is not to be confused with the current Hyundai Ioniq car offered in a few different powertrains, including one all-EV. So Hyundai, if you didn't want us to be confused, you should have chosen a different naming structure. But you can expect the Ioniq 5, a mid-size CUV, in early 2021. We shall see. Bollinger also unveiled an updated design with new production intent versions. They do have a price tag of $125,000 and up. They've had multiple production delays. They have a very niche target market, and they're now clout chasing from a Kardashian. So you can color me not that interested. And if you're drinking anything right now, put it down and swallow that last sip, as Toyota said they will have a new EV next year with a solid-state battery that charges in 10 minutes. They said the technology is a potential cure-all for the drawbacks facing electric vehicles that run on conventional lithium-ion batteries, including the relatively short distance traveled on a single charge as well as charging times. Toyota plans to be the first company to sell an electric vehicle equipped with a solid-state battery in the early 2020s. The world's largest automaker will unveil a prototype next year. The report went on to mention 310 miles of range and the super fast charging. And yes, they did say it would be a prototype by next year. But the reason I shared some of these last few items today is to show you a theme. Everyone is basically using these announcements or reveals and unveils as a way of saying to the market, hey everybody, don't forget about us. Meanwhile, behind the scenes, these companies are completely lost. And look, I'm not ragging on them, as I really do want Tesla to have at least some level of competition. It would be good for Tesla and even better for the consumer and our planet. But the fact of the matter is, no one has anything truly intriguing, and they're not going to next year either, at least not in the United States. Yes, we have the Mach-E and perhaps Lucid can do well, but everyone else is literally up the creek without a paddle right now. But with that, I hope that you guys have a great weekend, and I look forward to seeing you in the next video. I hope that you have a great day.